Okay, guys, we're still busy with the cash flow component, and I said we dealt with taxation paid, we dealt with dividends paid. Now remember, when you're dealing with your investing activities, right? Under your investing activities, what are you looking at? You are looking at the purchase of tangible assets, right? You're also looking at your disposal of assets, okay? And you're also looking at your fixed deposit. So these three components will go under your investing activities, right? Now, with regards to the purchase and the disposal of your tangible assets, what method do you use? And the best method to use is the one I'm going to show you now. Why? Because you're using something that you're au fait with. You're using something that you know about. What am I referring to? I'm referring to note number 3, your fixed assets note. Here goes. You start off with your carrying value at the beginning of the year, right? You then bring in your depreciation, okay? And what do we know about depreciation? Depreciation is what we refer to as an imputed expense. What do we mean by that? It's an expense that does not affect the flow of funds. No money is changing hands, right? But again, remember, when you're dealing with depreciation, you show it in a bracket when you're calculating. Now, in this note here, it just depends what information is given to you and what are you looking for. Because sometimes you have to work out the additions at cost. Sometimes you have to work out the disposal at carrying value, depending on what the examiner has asked. So the order is important. You've got your carrying value at the beginning of the year right on top. You've got your depreciation for the year. You've got your disposals. But remember, at carrying value, right? Okay. Then you bring in your additions at cost. Okay. And then you have your carrying value at the end of the year. Now, what is important here, guys, is depending on how you are working. Remember, it will be your carrying value at the beginning of the year. You'll subtract your depreciation. You'll subtract your disposals at carrying value. You'll add your additions at cost. And this will give you your carrying value at the end of the year. That's working from top to bottom. Right. However, if you're working bottom to top, depending on what information is given to you, I'm emphasizing that, depending on what is given to you in the question paper or the question that you are dealing with. If you're working from bottom to top, remember it's a reverse operation. That means you're going to subtract your additions at cost, you're going to add your disposals, you're going to add your depreciation, and you're going to subtract your carrying value at the beginning of the year. So please, guys, very important. Look at how you're working. If you're working from top carrying value at the beginning of the year, right? And you're working downwards, like I said, it's your carrying value at the beginning of the year minus your depreciation, minus your disposals at carrying value, add your additions at cost, will give you your carrying value at the end of the year. But if you're starting with a carrying value at the end of the year, work backwards, and that's how you're going to calculate your, whichever figure is the missing figure in this particular calculation. Right? So that will then give you your purchase of fixed assets, which will be in a bracket, all right? Obviously, because the money was utilized, cash was utilized to buy the tangible asset. Your disposal will be a positive because you sold it, you generated cash. Now you look at your fixed deposit, and your fixed deposit is a straightforward comparison. What do we do? Watch here, 2020, 2019, your fixed deposit was 200,000, is now 50,000, right? Immediately you apply the rule that we spoke about earlier on. Which one? Asset decreasing, generated. Liabilities decreasing, utilized. Is my asset decreasing? Yes. What happened? I generated. How much did I generate? I generated an amount of 150,000 Rand. Right? So it's a straightforward comparison. I had an asset of 200,000. It's now only 50,000. That means 150,000 Rand came into my bank account. I generated 150,000 Rand worth of cash. Okay, guys. So in your cash flow statement, remember in note number 1, you add back depreciation. Why? Because it's a non-cash item. Depreciation is an imputed expense. Number 2, you add back your interest expense. Why are you adding back your interest expense? Because interest expense is not an operating expense. It's a financing expense. So you're adding back your interest now to subtract it at a later stage on the face of your cash flow statement. Okay, so here we've done all the aspects of your cash flow statement. There's another very important one that we need to deal with, and let's see if we can sort that one out so you can, if it appears in the exams, you know exactly how to deal with it.